Hello everyone and welcome back to Southern Wealth. I do hope you're having a wonderful day. If you do enjoy the content, please consider dropping that like and subscribe. Now, I wanted to mention something about crypto in general. Okay, we tend to think that whales are much more intelligent, if you will, than people like me and you. Now, why is this not the case? Well, if people got rich with Ethereum, Binance, Smart Chain, you name it, you can actually do on-chain analysis on their wallets. For example, there were people who just came into crypto in 2020 and they bought Shiba Inu, and they bought hundreds, or not hundreds, I'm exaggerating, but dozens of other coins. And then Shiba Inu went up 1.4 million fold, that is 140 million% over 2021. Which means that that person that came in with $5,000, $3,000, $10,000 became a millionaire. So officially became a whale. So, and then you actually see them doing the things that the retail, if you will, the small fish like you and me do, or hopefully you don't do it, but which is sell bottoms, buy tops, double up, basically become more aggressive when things are going up instead of when things are actually very in the depression zone. So you see these things happening in crypto all the time. Now, what happened 2022? Actually, something very similar to 2018. The Fed rose rates, markets were priced for perfection, markets start to come down, crypto, it's the 4-year cycle. Everyone was extremely happy with 2021, with all the craziness, JPEGs being sold for millions of dollars, any coin with a picture of a dog did wonderfully well, etc., etc. So people thought, oh my God, this time is different, we're going to have a super cycle, and now we have Michael Saylor, we have these guys, we have the other guys. Now this time is different. Of course, this time was not different, and Bitcoin went from 69,000 in November 2021 to 15,500 or so after the FTX collapse. Now, in between, like in all other markets, the whole thing didn't come crashing down all at once. So what you usually see is Bitcoin used to crash about 85%. But now I think they printed so much money that it only crashed 77%. Ethereum would crash a bit more, 83%, in the past cycle 95%, and then altcoins crash between 95 to 99%, and most of them never come back, and they are not part of what you call the blue chips. Now, what happened 2022? Very similar to 2018. Bitcoin crashed as around 77%. 2018 was 85%. And basically Terra Luna, you know what happened there, Celsius, BlockFi, Voyager, and then the collapse of the SEC poster boy, Sam Bankman-Friedman, and FTX collapsed. Of course, at that period, you should have read some of the articles where it was stating crypto is finished, it's all a scam, regulation will come through the door, this will all be shut down, that's it, we are finished, blah, blah, blah. Of course, that, and then I think some documentaries came out of how crypto is a scam, and that marked the bottom. Now, if you look at the wallets of people which are very wealthy in general, they accumulated. As soon as Bitcoin dropped below 30,000, they started accumulating very heavily. But you could also see some wallets, very rich people, selling the bottom. And what I'm trying to say here is you should look beyond what kind of balance does this person have on their wallets to how long have they been here. That will give you a very good idea if you're dealing with a real whale, or if you're dealing with a guy who, like you and me, got lucky and became a millionaire overnight by picking one of 100 coins, which is fine. Look, I would be very happy if that happened to me. I'm not trying to say to kind of downplay what that person's success. I'm not trying to do that. What I'm trying to say is that we tend to see oh my God, this guy's a $10 million balance, so this guy must be a genius. And then when you actually do the chain analysis, you'll see that that's not really the case. Then 2019, same as 2023, we have some rallies. And what's happening is the rally, the Bitcoin is going up, but when it's going up, it's still selling down aggressively because people don't trust it. So people remember 2022, every single rally followed by a bigger sell-off. Every single rally followed by a bigger sell-off. So this year, it has changed. So every rip has a smaller sell-off. However, people still see the selling, and people do the selling because they remember what happened in 2022. And then you get sandwiched in these super small, narrow windows, like 24 to 26K, like 28,500 to 3,500. And now, even lately, 29 to 29.8 or something, and we don't leave this spot. And this is where a lot of the smaller people are accumulating. People with lower balances just kind of give up on the thing and just go away. Some of them forget they have crypto and they just hold it. And this is all part of the preparation for the bull market. So I've seen a lot of people talking about, oh my God, maybe we don't have a bull market this time, because these coins are not moving, blah, blah, blah. I know 2019 feels like an eternity ago. But actually, if you put the chart of Bitcoin in 2019 and 2023, they're actually very similar. And the psychology is still the same. And the reason why this psychology is so predictive, so easy to predict in the crypto space is because it's, for the most part, without really large institutional money. So what you're seeing here is the real psychology of retail investors, if you will, completely kind of unfiltered, if you will. And what happened is the smaller investors, unfortunately, they buy when it's very painful to buy. They buy when it doesn't feel great. They buy when you see the red candles. The other ones, most of people, buy when the green candles are in. So most people will gladly buy Bitcoin at 45,000, but they will never buy it at 15,000, or they will never buy it at 20,000. And that's just the reality. And of course, when you have the Bitcoin halving, then the Bitcoin ETF will come out, then multiple Bitcoin ETFs will come out. Then, in my opinion, some rumors of an Ethereum ETF will start to pop up. And then people get overly excited, and now this is going to solve the world. Maybe another country heads it, like El Salvador, as a legal tender. Everyone gets super excited again, boom, boom, boom. Then something comes out, maybe AI stocks, maybe interchain operability, maybe decentralized exchanges, whatever, something catches on. People start buying it, maybe frog coins, maybe Pokemon's coins, maybe whatever. And then when everyone is convinced that this time will be different because now we have institutional money and now we have the presence of these guys and now we have this money that we didn't have before and now we have this, that is the time to get out, in my personal opinion. Of course, I'm not giving you financial advice, but that's when I start to get out. What I'm trying to say here is to make you understand that what you're seeing right now in the crypto market has been seen in all the other cycles. But because people tend to forget anything beyond 2 years or a year, if you will, you need to understand that these things have played out before, but people just forget. And when you start seeing all those articles being all bullish, everything, crypto will dominate the world, we don't need anything else, crypto is the savior of everything. That's the exact opposite. And crypto is mostly not having fun, because in order to succeed, you really need, in my opinion, you need to accumulate when it's very painful, and when it's not funny at all, and when you think you're an idiot over and over again. And by the time you're having a lot of fun, that's probably the sign to get out. So thank you very much, guys, and I'll catch you in the next one.